You're watching Economic Buzz. We still have Mr. Vicky Amarnani from Monex Investing the Futures to share his view over the topic that we bring up in this talk show this evening. Moving to the foreign exchange rate with the uncertainty about the tapering of QE3 and also weakening emerging markets, as we can see. What is your view on the US dollars?
I mean, this is everyone's worried about U.S. interest rates rising, QE tapering. I mean, at the moment, basically, the bond purchasing program is $85 billion per month. And now with 10-year treasuries already approaching 3%, a lot of the tapering has already been priced in. So on the meeting of 17 to 18 September, if they cut the buying program from 85 billion to even 65 billion, to 70 billion, let's say by 15 billion, 10 to 15 billion is already priced into the market. So there's no surprise. Because, people are cautious. Sometimes they get, a little over pessimistic. So I don't think there's going to be a, if the market doesn't taper as much as expected, there could be a rally, there could be a relief in the bond market or stock equity markets as well. But in terms of stimulus cut, I think everything's pretty much priced in. There's not too much to worry about from that side.
So you will lead me to another question also advised by you. Will this US raise rates in 2015?
Okay. Well, now basically they're reducing the bond buying program. So obviously they will completely reduce the bond buying program. Then only they can raise rates. That's why the earliest it'll take them at least a year to reduce the stimulus cut. Let's say they cut by 10 billion, 15 billion, slowly every quarter. So by the time they raise rates, we have to keep in mind that even if rates rise, they will rise very slowly. So now we're at 0 to 0.25% interest rate in the US. If they may raise it by 25 basis point to 50 basis point very slowly, because if interest rate rise very quickly, that will affect the mortgage market. It'll affect the housing market. It can lead back into a crisis as well. And the US Fed, Mr. Fed Bernanke has made it very clear as well that it only depends on the data and the growth of US. If unemployment, which is now at 7.3%, reduces to 6.5%, if the growth is as forecasted, then only they will slowly cut down the stimulus and raise rates. But if there is a need to provide more support, then they will provide more support. So don't worry about US interest rates rising like to 3-4% in like the next 2 years, 3 years. I do not think so. I mean, some very positive analysts have taken an estimation of 2% to 2.25% in 2016. But my view is that rates will go up very slowly in the US, and the market is in a way over panicking. It is already priced in. Yeah.
What can be foreseen from the data of the growth of US actually? Can we predicate the start from now when we try to make the outlook for the year to come?
I mean, US growth is still just near the 2% borderline, which is just so. Inflation is under control below 2%. That's why they can still afford all this monetary easing, which is now slowly being scaled back. But we have to also see future data. But definitely in the US, the housing sector, the consumer confidence, the manufacturing data, payrolls, unemployment rate, there has been a good improvement in economic data. That's why they're coming up to this. But we have to bear in mind that can the economy afford a rate hike? Now the economy looks good with low rates, but with higher rates, can the economy still continue to improve? That's what we have to wait and see. But according to me, the interest rates will rise very slowly in the US.
I see. Back again to rupiah, Mr. Vicky. To what level our current exchange rate actually, the fluctuation, could endanger, let's say, our business environment and also the investment climate within this country?
Yes, I mean, I think if we see the Indonesian rupiah depreciate till 12,500, 13,000, it is still manageable, maybe, and still under control. But if you see a complete panic in the market, I mean, there's always that little uncertainty. What if? If there is a complete panic in the market, everyone pulls out of the rupiah, stock market starts falling, rupiah goes above 13,000, which I do not foresee. I see it going to, yes, I do see it deteriorating further to 12,000, 12,500 levels. We have to also bear in mind that the spread has become very wide. If you go to websites, now the local banks, the spreads are 400 rupiah between the bid and offer. That also creates a bit of a panic. But I do not foresee, I think this is manageable. We will see dips, we will see a bit of sell-off. Maybe the downtrend can continue, but like we mentioned, no major financial crisis like the 1997, 1998, because the fundamentals are much healthier compared to before.
Speaking about the optimism from our regulator in this country, based on the government's projection, let's say, they said rupiah will bounce back at least in October 2013 due to the risk-off global issue. So they said. What can be done actually in securing the economic activity in the meantime, when they are strongly optimistic that it's going to be bounced back, at least in October 2030?
Yeah. Well, I think structural reforms, more friendly business environment for people to invest in Indonesia, attractive US dollar schemes, like India has been doing. India is giving over 4.5% for 3-year term on US dollar per year annualized. So we have to provide better schemes, better investments. Maybe we can expand our horizons as well in the financial markets to attract more foreign investors. And basically, another thing is as well that interest rates will have to go up. Interest rate now is at 7%. I foresee interest rate going up at least by to 8% or to 8.5% by the end of the year to match it with inflation, so that people find it, worth their value of money to invest into the country as well.
Agree. Mr. Vicky, one more segment to discuss about this.
Thank you.
Make sure you stay with us. We still have one more segment on eBus talking about securing portfolio investment under the current market situation.